Hi, and welcome to this week's Market Minutes. In this week's episode, I'm going to talk about when it's okay to buy an overbought stock or market. Plus, I will do my regular weekly market analysis, try to answer that question of whether there is more of a correction coming in the market. I've got a couple trades to consider, and then I will look at the trade of the week on LABU. All right, so when is it okay to buy an overbought stock or market? Well, to answer that question, we first have to explain what I mean by overbought, or in many cases oversold. You see, we have trends in the market, and when price runs away from the trend, when stocks go up too quickly or when markets go up too quickly, we call them overbought. And really it's a situation where investors are emotional, and that is what causes them to chase stocks higher, making it overbought. And we can have the same situation when markets or stocks go down too quickly. So you have this characterization where you have a run up away from the trend line, and there is really only one time when buying overbought is okay. And that is if the price gains come out of a period of compressing price volatility. Even though the market may be well above its upward trend line, it is these breaks from low volatility which really are the market telegraphing that a new trend is likely beginning. So I would say buy overbought when you get a break from low volatility. And it's a lot easier when we look at a chart to show this. So all of the reds dots on this chart, the 1, 2, 3 red dot, those are times when the market was overbought and it was not okay to buy. And the reason, we were far above the trend line at those times. There's a lot of distance there. Well, then we have the green points, 1, 2, and 3 in green. And again, price is some distance above the upward trend line. You can see that there. However, what is different is that at the green dots, we have breaks from low volatility. Now, when I say low volatility, very simple to see it on a chart. If you can draw a line across the tops and a line across the bottoms, and those lines are converging toward one another, then you have compressing price volatility. And you can see that at all those points before the green dots, 1, 2, and 3, we have compressing price volatility. What's happening there is the market is coming to some agreement about what the stock is worth, or in this case, what the overall market is worth. So you get that compressing of volatility, buyers and sellers coming to an agreement, and then the break from that compressing volatility happens when there is some new information that is motivating investors to act. The buyers are coming in aggressively because something new has made them want to be a buyer. And it is at that point that you really tend to get the start of a new upward trend. All right, so buy overbought when you get breaks from compressing price volatility. All right, let's get into this week's analysis, starting us off with the US markets, and we will take a look at that S&P chart again, this time a 30-day, 60-minute version. And you can see we've got a nice upward trend underway, perhaps been a little bit sideways over the last week or so, and we're really just compressing our volatility as we go sideways here. The bottoms are rising from left to right. That means we have generally optimism, but it feels like the buyers aren't sure whether we have the next reason to send prices higher. So we need a break through that resistance level. We're sort of going to run into a little bit of resistance from over here. There was some price consensus at that level. So I would call this somewhat optimistic, but we need that break to the next level to imply that the buyers are interested again. And I think one of the reasons the buyers are hesitating here is because we've had this great bounce back in the market over the last 5 weeks. The lows made there, and we've bounced back since basically just before Christmas was our bottom on the 24th of December, and we're now rallying up to this downward trend line that I've drawn across those inflection point highs. We're almost there now. We could have 1 or 2 more strong days and we would hit resistance at that downward trend line. And it feels like the buyers say, you know what, we've made a real good comeback in the last little while. Do we have a good reason to continue the strength? It's a very risky time to be a buyer, I would say, because unless we break that downward trend line, we may rally into it, but it's likely that there will come some selling pressure at that level. So the momentum is up in the short term, but the momentum in the longer term is still down. We haven't broken that pessimism. So I think you can be a buyer on Monday if the market is showing strength, but that does not mean that we're going to be buyers for a long period, because ultimately we need to break that downward trend line first. Looking at the Russell 2000, in this case I've drawn the daily chart, and it actually shows that the buyers have been able to break the downward trend line. I've drawn it again across the inflection points, and we stalled at it, and then we broke it. And this past week we had a little flag pattern and then broke that on Friday. So that implies that the buyers are picking up momentum, some strength, and they should send the small cap stocks higher. Now the problem is that we've got a pretty lengthy trading range over here that will provide some supply of stock, because the people that were buying in that zone basically in November, late October, they still have a loss on those positions. And the natural tendency for humans is to think, I'll get out when I can break even again. So as price comes up into that zone, you're going to get some supply of stock as people try to get out at the break even trade. And there was quite a bit of volume that traded back there. So it's going to take a little bit of time to chew through that overhead resistance. All right, on to the Canadian markets, and we'll start off with the TSX 60 30-day 60-minute chart. You again can see pretty good upward momentum, and we've been going sideways for the last 5 or 6 days. We're essentially building a base, and the market looks like it wants to break higher. It just hasn't done it yet, and until we can break out through that resistance level, I wouldn't get too excited about being buying, because you're fairly long into the upward trend already. However, this would be a break from low volatility, and that would be a case where if we do get that breakout maybe to 23, 30, maybe 40 on the T.XIU, worth considering this Canadian market again. Longer term, there's the problem. We're bumping up against that resistance at the downward trend line. The S&P is just a little bit under. The Canadian market has made it back to it, and that's why the market's stalling. There is this sense that, do we really have a good reason to send stocks back up toward their old highs, or are we going to roll over again and make new lows? My sense is we may roll over. We probably won't make new lows. We may make a rising bottom. That's typically how bottoms are made, is we make one low, we go up, we pull back, we make a rising bottom, and then we try again to break that downward trend line. We could break it though. And so if next week we do break through that resistance level that I showed you on the last chart, then I think we're probably moving up toward the old highs again for the T.XIU. TSX Venture, heavily based on cannabis these days. That's where the activity comes. Cannabis stocks had a sell-off into Christmas, and then they have been making a comeback, and there's starting to be some of those stocks showing life. And I think that it's not a bad time to start to consider that sector again. I was a little bit negative on it last year because it had just become so overbought, but we've seen quite a good correction in those stocks, and now they're starting to show a base and moving up through some optimism, just like this chart is. Here is the lows. Now we've made a rising bottom, and on Friday we broke out from that rising bottom. We're not necessarily through the downward trend line. I could draw it like that, in which case we are, but I could draw it across that top and we aren't. So I would say that there's a good chance we're trying to break that downward trend. It gets a little bit into the semantics of how you draw the trend line, but I think it's worth taking a nibble on some of those speculative cannabis names and other sectors. Of course, on the TSX Venture, you also have a lot of mining stocks, and as we'll see in a moment, gold has been doing pretty well of late, and certainly last week, and that could be one of the areas in that market that has potential. All right, on to currencies. US dollar was a little bit of strength at the start of the week, and then it fell off into the end of the week as talk of maybe no interest rate raises or maybe even an interest rate drop in the US hit the market. And so I think we could be seeing a falling top here, which would sort of coincide with that recent break of the upward trend line. So there's some signs that the US dollar is going to roll over and get weaker near term. It's a pretty short term signal, so I wouldn't get too much confidence in that signal, but it is a signal nonetheless that the US dollar is starting to feel a little top heavy and like it may go lower near term. All right, looking at the Canadian dollar, we had some pretty decent strength last week, and it would be easy to get sort of encouraged by that because the daily chart for the Canadian dollar looks pretty nice. When you look at this longer term weekly chart, you start to see a bit of the issue, and that is the long-term weekly downward trend line is still there, and we haven't broken that yet. So I've talked about that for a while. The Canadian dollar's been in this downward sloping channel. We're at the sort of the lower boundary of it. We've come up and we're getting close to the upper boundary, but we haven't broken it yet. So some cause for optimism because we are pushing toward that resistance level, but until we break it, we haven't reversed trend. All right, on to the interest rate discussion. We always look at the US Treasury bond market. Again, you always have to keep in mind that this is sort of the upside down chart, because if this chart is going up, interest rates are going down. If this chart is going down, interest rates are going up. And over the last 6 weeks, we've generally moved higher. You can see that there. We are coming into resistance, which we hit 3 weeks ago, and we're stalling there. And that's pretty typical of what we would expect. The question now is, are we going to eventually break through that resistance level? This is called a cup and handle pattern, and we're building the handle on the right-hand side. If we can break out through that 123 level on the TLT, then we should make the next leg up. However, the next leg up isn't that much higher because our next level of resistance is right about there. But it does feel like interest rates are more likely to go lower than higher, and of course the bond market higher than lower. Commodities, always like to take a look at gold and oil. Our first chart is gold, and it had a pretty decent week after going sideways for the last 3 weeks, and I was a little bit pessimistic on it last week because there was a bit of a breakdown. However, it made a good comeback from that, and it has kept the upward trend line in place, and therefore the buyers remain in control in the short term for gold. And it does look like it's likely to head up toward that longer term resistance in around the 128 level on the GLD ETN. Will we get there? Most likely. How long will it take? It could take weeks or months. So it's not something that's going to happen tomorrow, but the bias is to the upside as we move higher. Now, big picture, we've been in a long-term sideways market for gold. It really isn't that exciting as a long-term trade, but we are seeing opportunities to trade individual stocks in the short term. On the oil chart, and we talked about this last week, really want to keep an eye on the oil stocks, because if oil can break out of this cup and handle pattern at the bottom here, we broke the downward trend already. We're now building the rising bottom. We just need the breakout, and that would be a sign that the buyers are back interested in oil. Hasn't happened yet, and those two stock picks that I made last week, and you can look at last week's Market Minutes video to see those, they haven't triggered what I told you to watch for, the breakout through their resistance levels. So it's something to watch, but don't get too excited until it actually happens. So my ratings then: neutral long-term, bullish short-term for US stocks, neutral on both time frames for the Canadian market, gold neutral long-term but bullish short-term, and oil neutral on both time frames, watching for that breakout on the oil chart. There's been continued strength in stocks, and that's restoring investor confidence, but we need to beware of the resistance at the downward trend lines. Until we break those, the market is facing a little bit of a hurdle. So look for opportunities in oil stocks if oil can break through its short-term resistance. Gold continues to surprise with strength, and the Canadian micro cap stocks are really showing some buyer interest, and something to look for there. All right, moving on to the stocks to watch. I've got a couple of names, charts that I found doing market scans on stockscores.com. And in this case, I ran the abnormal breaks scan. Those are scans that are available to StockScores members. And first of all, we have here ALEF, a pretty speculative stock on the venture market, TSX Venture. Broke the downward trend line about 3 weeks ago. That was step one. Now building that rising bottom, step two. And the step three in the long-term reversal process is the break higher from a rising bottom after the downward trend has been broken. So that's a pretty good looking chart. Stock likely to move higher near term. Another name is one of those gold stocks, kind of a similar chart in that it has also broken its downward trend line. It's built a rising bottom, perhaps not as clean and now it has broken through that resistance level. Volume good, but not great. This seems to me to be more of a sector play as opposed to one specific to this company, Yamana Gold. But the gold sector, starting to show some life again, the gold miners. And so this could be an area where you could take a little nibble and benefit if gold continues to show strength. Trade of the week, I always like to do these more as an educational thing. It's not a trade you can make now, but rather learn from a trade that came up in the previous week. Now, this is an example of a stock that on the entry signal looked to be a little bit overbought. The entry signal was right there. Barely can see it, but there's a purple dot there. That is the stock scores action candle indicator at work. And at the time that happened, we were fairly far above the upward sloping trend line or even the moving average. So there's some distance there, and some would say, well, it's overbought. However, it was a situation where the market was breaking from compressing volatility, and therefore it was a very good buy setup. So in this case, using my risk management methodology, there was if you took $100 of risk on the trade, you could take $500 worth of risk, but for a $100 risk tolerance, the position size was 450 shares for a total position value of $20,813. However, using 3-to-1 margin, the amount of capital that you would need is just under $7,000 to take that $100 of risk. Now the trade moved up nicely until the close, finishing the day at a 6.59 RR gain. RR stands for risk reward. In other words, you took $100 worth of risk, you got 6.59 times the gain, $659. However, you have to factor in slippage and commissions. I always use about 0.2 or 0.3 RR on every trade for slippage and commissions. So you're netting out about 6.3 RR, which means a $630 profit or a 9% return on the capital required to take the trade. And that was in about a 3-hour hold on Friday. So to make 9% in 3 hours, pretty good. I don't think anyone would complain about that. And that's really the type of trades we love to do with the Stock Scores active trading approach. You want more information on that, you can go to the Stock Scores website. I'm not sure where it is, underneath Trader Training. Sorry, I should know that. Go to the Trader Training page on the Stock Scores website and you can learn all about it. Well, that has been the Stock Scores Market Minutes for, January 28th. I hope that you have found it educational, useful in your own trading, and most importantly, have a great week in the market and trade well.